changes which has happened of late, especially through various notifications which are issued and subsequently also some circulars which were issued in this regard. In the process of his deliberation, I will be pitching in and giving certain practical insight into those changes and the impact of those changes for all the participants. Jagadish is a chartered accountant who is presently heading a Vizag branch of Venu and Vinay. And now over to you, Jagadish, for you to take over.
Okay, thank you, sir. Let me share my screen.
Please.
Hope my screen is visible to you all. Okay, it starts with today I will discuss the latest changes that have been made through these circulars and various notifications and advisories, and I will cover the press releases also and the decisions that have taken place in the council meeting. And total nearly there are for today's discussion there are 66 changes we are going to discuss in today's session. So we'll go through the changes one by one. First, we'll discuss the changes with respect to the input tax credit. So this is the important change. So mismatch between GSTR 2A and 3B. Just a second. Yes, mismatches in GSTR 2A and 3B, for which department had issued number of notices for the year 2017-18 and 18-19. Now, during the process of audit, investigation, scrutiny, wherever department has found that one has availed the ITC more than the ITC that is reflecting in the GSTR 2A, then department tried to reverse that ITC, treating it as an ineligible ITC. So now, understanding the difficulties faced by the taxpayer and department and increasing the number of litigations on this issue, department had issued this circular. So we'll see the circular, what this one, okay. So the circular number is 183/15/2022, dated on the circular has issued on 27 December 2022. The circular explaining how to deal with the differences between the GST 2B versus 2A. First of all, we'll see what is the applicability of this circular. The circular is applicable only for the period 2017-18 and 18-19. And further, it is also clarified that this circular is only applicable in case of genuine and bona fide cases, not in case of non-bona fide cases. This circular cannot be applied. And also, the circular can be applied only for the ongoing proceedings, not for the completed proceedings. We cannot apply this circular. So let's see what type of scenarios that will be covered through this circular. See, scenario 1, supplier has filed 3B and these are the taxes, but for that corresponding period GSTR 1 had not filed. In that case, supplier invoices will not reflect in my GSTR 2A. And coming to the scenario 2, supplier has filed GSTR 1 and 3B, but not reported as supply in GSTR 1. In that case also, in my 2A, that invoice will not get reflected. Whereas supplier has reported in the GSTR 1 as B2C supply instead of B2B supply. In that case also, that invoice will not reflect in my GSTR 2A. Whereas supplier has wrong GST, instead of my GSTN has given other party GSTN. In that case also, I will get the mismatch between GSTR 2A and 3B. And other situations could be, he has filed the GSTR 1, he had not filed the GSTR 1 or 3B, but he had discharged the liability on that supply through DRC 03, or credit note has not received, or credit note has wrongly uploaded to me. In that case also, I will get the difference between GSTR 2A and 3B. So these are all the scenarios covered by this through this circular. So what now? Officers during the search, scrutiny or investigation would seek the details of the invoices or a debit notes on which ITC has been availed but not reflecting in GSTR 2A, and ascertain the fulfillment of the conditions specified in the section 16. So, okay. For ascertaining the condition fulfillment of the conditions specified in the section 16, the circular has proposed the criteria how to deal with these changes. So, if there is a difference between the GST and 2A and 3B more than 5 lakh. In that case, qua supplier. This is for qua supplier. If the difference is more than 5 lakh, then he needs to get the certificate from the CA or chartered accountant or the cost accountant stating that supply has actually made and the tax was paid to the government and fulfilled all the conditions to avail the ITC for that period. And if the difference between the GST 2A and 3B is less than 5 lakh qua supplier, so self-certificate from the supplier stating that the supply was actually made and tax was paid to the government. So, in this way, coming to this. Sir, would you like to add anything, sir, here?
Sure. I think, first of all, let's understand the background of this particular issue and the clarification. So it becomes easy for us to understand the context, applicability, and usage of this circular. First and foremost thing, why this issue is cropping up. One of the conditions contained in section 16(2) is that the supplier has remitted the tax to the government. How do we verify this? There is no mechanism provided in the law or the process or in the rules. The department, instead of ascertaining whether the supplier has paid tax, they are simply going and identifying whatever the credit you have taken. They are asking a list of it. That is being compared with the list of invoices which are uploaded in GSTR 2A, which was in effect not at all there for 17-18 and substantial portion of 18-19 as well. But still, the report which is generated subsequently, looking at that, they are going and asking the taxpayers that you have taken wrong credit, therefore you are not eligible to that extent. To what extent this argument of the department is right or wrong, the time is going to tell in the days to come. Technically and legally, when we are fighting out these type of cases, we are of the clear understanding merely based on the fact that the values are not appearing in GSTR 2A. The denial of input tax credit is not as per the law. However, at the same time, there lies a responsibility on a taxpayer to fulfill the conditions contained in section 16, subsection 2, that the supplier has remitted the tax. Since there is no way or a mechanism in which I am able to ascertain that fact, technically speaking, it's a impossibility of a situation where I can always plead that without you having initiated any proceedings against the supplier, how did you form a conclusion that he has not remitted the tax? Is a legally and technically argument being taken, and there is a valid ground, in fact, as well. So, based on such things, these notices or these issues can clearly be defended. Now, coming to the question whether this circular is a all-in-one solution to such problem, answer is no. Here, it is not diluting any of the provisions contained in section 16 at all. Still, read with section 155 of the CGST Act, where it says the burden of proof of establishing the eligibility of an input tax credit is on the taxpayer who is claiming a credit. So you are bound to fulfill those conditions of the tax having been remitted by the supplier. But merely by the fact that it is coming in 2A would not be sufficient. In fact, if somebody can go and prove that. So technically and legally speaking, this circular is only facilitating a scenarios where the taxes has been paid by the supplier, but while filing the details in their returns for these 2 financial years, there was some error, bona fide error. In fact, the circular uses the word bona fide errors. Then in such a scenario, instead of unnecessarily getting into litigation, as a guidelines, they have given their officers, authorities who are wherever this type of cases are coming up, to take up this guidelines to decide the case. What are all the scenarios which are covered? In fact, there's a typing error. It's not a scenario 3 is repeated. Actually, 4 type of scenarios are only covered. In other type of scenarios, there may be a situation which is there. In such cases, this circular is not applicable. Still, you have to take up a litigation. It only covers a situation, whatever stated 4 scenarios, where alternate way of mechanism has been provided by saying, okay, it does not come into A, no problem, but why don't you get a declaration or a certification from the supplier in whose cases your 2A is not getting reflected. So in other words, say you are the person who is taking an input tax. I am the supplier to you. I've actually paid taxes, but while filing, I've done any of these errors, where scenario 1, 2, 3, or 4. Then in such a scenarios, it has not come to 2A. You are permitted to take an input tax, provided I give you a declaration that I have in fact paid a tax on these supplies made by me to you. If the value of my supply to you is more than 5 lakh per year, then instead of declaration, I need to take CA or CMA certificate who should verify my books of accounts, my records, and my documents to certify that for the invoices which are in question, I have paid tax to government, hence you should be given a benefit of that input tax credit. So this is the sum and substance of this circular. In other words, I would only say, if somebody critically sees this clarification, it is putting down its feet and saying the condition of supplier paying a tax is to be fulfilled. There is no waiver of such condition. In fact, through this circular, they are making their point very, very clear. If supplier has not paid a tax, you will not get an input tax credit. Whether this proposition is right, wrong, we have to see how it goes in various judicial forums. And one more important point to be noted is, in the past, where audit had come, you did not wanted to take any fight with the department. You accepted and paid the difference. Now that this circular has come, giving that circular, can I go ahead and claim refund of it? The circular is very clear in saying this is applicable only for a pending litigation and not for the past cases already where you already paid. This also is not statutorily correct when it can be accepted in a scenario where the cases are pending. In cases where already you have paid, it amounts to wrong or non-payment of such amount, excess payment of such amount, where you can always go back and claim a refund. Anyway, you have paid, the amount is quite considerable. I recommend that you should go ahead and file a refund application wherever you can able to get this type of declaration or CA certificate and produce to the authorities, and then take up litigation. Because if it comes up, Anyhow, you already paid, you're not going to lose anything more beyond that. I think this is what I want to give, additive points for these things. Jagdish, you can proceed further.
Okay, sir. So rule 37. What rule 37 says is reversal of ITC in case of non-payment of consideration to the supplier. So position of the law remains the same since the introduction of GST, that in case of failure to pay the supplier amount towards the value of supply along with taxes within 180 days from the date of issue of invoice, the requirement of reversal of ITC would be only to the amount of amount remaining unpaid to the supplier. If I not made the payment to the supplier within 180 days from the date of invoice, then I require to reverse the ITC. But what's the change here is, earlier rule 37 did not cover the scenario of the partial payment, whereas amendment now provides for ITC reversal where amount to the supplier remains unpaid either wholly or partly. But here there is no much change. Only the wordings has changed. Wholly or partially has inserted in the rule 37. Earlier, only the partial payment scenario is not covered. Now it's covered. Even a partial payment has not been made to the supplier, then the ITC has to be reversed in proportion to the consideration not paid to the supplier. Coming to the rule 37A, this is the new rule has been inserted. What it is saying is,
Jagdish,
yes,
on the previous slide.
Yes, sir.
See, again, I would like to just emphasize the practical side of this particular issue which is going on. Many cases, people have not remitted within 180 days from the date of availment. My suggestion is wait for some time, because if you are paid later, actually there is no impact on the input tax credit. It's only the interest aspect which is going to come. So you have to take a calculated risk on a fact that if there is some dispute on an invoice, whether the amount was payable at all. There are multiple interpretations which is being taken on this particular provision, especially section 6, second provision, section 16(2). Failure. What is the term failure means? Failure is a relationship between the parties to the transaction. Actually, we have agreed beyond certain the 180 days to make a payment. The recipient, supplier also has no problem with it. Why the department should have a problem with it is a type of argument which is being taken. Why I'm emphasizing this fact is merely by the fact that, in other words, what happens ultimately? Ultimately, the issue is about only interest. There is no interest on interest. Whether you pay the interest today or you pay interest after some time, still the amount would remain the same. And secondly, there's also a possibility of some amnesty scheme coming in, so that you can take a, if it is so coming, you can take a benefit of that and seek a waiver of interest because of whatever the reason which the scheme, if it is going to come up, you can avail this one. Second thing, we are also proposing legally that government is getting unduly enriched with this particular provisions. One, the supplier has remitted the tax, whereas I have availed the input tax credit merely for the purpose of me delayed payment of the value and tax to the supplier. Why government should get an interest on that? That is totally incorrect proposition, is what is being agitated, and also probably the matter would be taken up for litigation, saying that when the tax, government has already received the tax, why the recipient of such tax for delayed payment to the supplier should be fastened with the interest? If at all they are collecting any interest from us, that interest should be passed on to the supplier is what is the proposition which is being put across before the legal forums. So this was just for your information. And Jagdish, the interest is to be computed from when? Is there any change on that?
No, sir.
Okay. Please proceed.
Rule 37A. This is the new rule introduced, which is saying that ITC, which has been evaluated in GSTR 3B, in respect of the invoice or debit note, which has been furnished by the supplier in the GSTR 1, but the corresponding GSTR 3B has not been filed by the supplier till up to 30th September. In that case, ITC has to be reversed in respect of that invoice or the debit note. So if he had not filed the corresponding 3B up to September 30th September of the following financial year, then ITC level in respect of that invoice is required to be reversed. So when I have to reverse, so I have to wait till the 30th September. I have to check whether he has filed his 3B for that period or not. If he has filed, okay. If he has not filed, then I have to reverse the ITC on or before the 30th November. If I have not reversed that ITC on or before the 30th November, then section 50 would attract and have to reverse the ITC along with the interest. So after when he had filed the GST 3B, then I'm eligible to reclaim the credit. Okay. And then rule 37 also, when I have made the payment to the supplier, then I am allowed to take the credit. So retrospective change in this is the whole change only. Earlier, in case of wrong availment, there is the interest when I have availed the ITC wrongly, but clarification has given only when you have utilized the ITC, then only interest will attract. And the interest rate earlier is 24%, but now at 18% only. Only interest will attract only when you have availed and utilized. If you have availed and not utilized, then interest will not attract. So coming to the reversal under rule 42 with regard to the duty credit scripts. So what the clarification is saying is that for the purpose of the computation of the rule 42, value of the duty credit scripts shall not be considered as an exempt supply, whereas duty credit scripts are covered under notification number 2/2017, which is an exempted supply of goods. Only for the purpose of the rule 42, the sale value of duty script shall not be considered for the rule 42. Shall not be considered as an exempted supply for the computation of the rule 42. So to the list of interest on deposits, now the sale value of duty scripts has added.
Okay, I think I need to add a couple of points here. As far as that interest is concerned, there's a little background to it. Initially, there are two separate sections. I mean, other provisions. One was section 50, subsection 1. Next, section 50, subsection 3. 50, subsection 1 was dealing with interest payable on output tax, whereas 50, subsection 3 was dealing with the scenarios of a what I can say, in spite of being mismatched in the input tax credit mechanism, which was initially set out, which did not got implemented at all. So in spite of mismatch, still the taxpayer goes ahead and avails such credit. Then in such a scenario, to that extent of the input tax so availed, the tax rate, interest rate was separately notified to be at 24%. There was no specific provision which got linked to sections 73, 74, specifically with regard to the excess or wrong availment of input tax credit. Couple of judicial precedents also were rendered, wherein they said there is no mechanism at all to demand interest in case of excess or wrong availment of input tax credit. The whoever was in the committee, GST council, whoever it is, they realized the mistake. Though they said, okay, we will give you a relief, but actually they tried to protect their interest. It was nothing like, favoring the industry. They protected their interest by amending section 50 subsection 3 retrospectively with effect from 1st July 2017. And also the corresponding notifications which were issued wherever the 24% tax rate was there to get reduced to 18%. But in this 50 subsection 3, what they did is any input tax credit wrongly availed and utilized, then what is the interest is payable to the extent of that wrong utilization. Now there are two problems. We discussed about 50 subsection 1, we discussed about 50 subsection 3. What is in between 50 subsection 2? This section 50 subsection 2 read the interest which is payable under subsection 1 shall be computed as we prescribed. Prescribed means it should be given through a rule. But if one were looking into the rules, there was no specific rule at all which was providing the mechanism for computation of that particular interest. While they did the amendment to this 50 subsection 3, when they were giving out the mechanism how to compute the credit is utilized or not, at the same time, they also introduced the mechanism of computation of interest for this purpose of section 50 subsection 1 also through rule 88 capital B. This rule also is introduced with retrospective effect from 1st July 2017. In fact, many places we are taking an argument that, okay, this came in later, so earlier was not payable, though it may not be sustainable. Again, nearly some cases where they're not able to deposit immediately, they're taking some legal grounds. So they're putting across these type of arguments to say the law was introduced later, so for the past it cannot be made applicable. It's only for the future. Some type of arguments are being taken. Just for information. I don't suggest that you should take it, but I'm just putting across for your information. So effectively, if you go through rule 88 capital B, there is a mechanism which is set out when, how to compute an interest for the purpose of section 50, section 1, as well as when a credit is said to have been utilized. What happens there in rule 88 capital B, it provides that once you utilize input tax and the balance gets reduced over and above the amount of excess credit availed, later on through a subsequent availment of input tax credit, even if the balance gets increased beyond the credit which is said to be wrongly or excess availed, still you have to pay interest from the date when the balance got reduced from that level. So in other words, once the balance is reduced below that level, means you utilize the credit, subsequent addition of a credit will not reduce your impact of interest, reduce your liability to interest. So be aware of it. And there's another problem in this, whether we need to look at this utilization of a credit individual to each of the tax sets, that is CGST separately, SGST separately, IGST separately. There is no clarity which is forthcoming. In our understanding, since there is an order of utilization which is specifically specified, As a overall credit, if it is more than that, probably we can try to put across saying that the credit is still not utilized. And I think this is something to very important for you to note down with regard to this interest in delayed payment or excess availment of tax credit. At the same time, this reversal of credit, though he explained about how to compute, majority of the cases, there have been a lapses in following the procedure to be followed for the purpose of Rule 42 in majority of the cases. So please look at your transaction and see whether there is any such non-compliance with regard to Rule 42 and 43. However, practically, if you ask me, sometimes non-compliance periodically and paying up with the delayed interest at a later point in time to be more beneficial considering the extent of the work involved in that is what some of the assessors do say, tell me. Further, this 43 capital goods credit mechanism is very cumbersome. Many of them feel that, sir, we don't want to get into this, or we'll see when it comes up. Okay, so these are the practical side of that particular aspect. Okay, over to you, Jagadeesh.
Okay, sir. Someone has asked question there. Turn to the previous page and explain. Okay. I think this one. Rule 37A.
Go ahead, Jagadeesh.
Okay, sir. Okay.
Explain.
Yes. What the Rule 37 is saying is that if I avail the ITC in respect of the invoice, but the supplier has not filed his 3B for the corresponding period. If in that case, I have to reverse the ITC if he has not filed a GSTR 3B till the 30th September of the following financial year. Let's say I have availed the 100 rupees ITC for the month of March 2022. Let's say supplier name is X. For the March 2022, he has filed a GSTR 1. He has filed the GSTR 1, but he has not filed the GSTR 3B for the March 2022. And I have waited till 30th September 2022. But he has not filed the GSTR 3B till 30th September. Then I have to reverse the ITC in respect of that invoice in the before the 30th November. So, and in the December 2022, he has filed March 2022 GSTR 3B. And then in that case, I can avail the ITC in the month of December 2022. That's the summary of Rule 37A. Okay. Hope
again, this particular provision is merely to collect interest. Even somebody has not complied with it. Finally, it is proved that the supplier has paid the tax. The impact will be only on the interest for the period between the period lapsing the 30th November. Subsequently, whatever. Then subsequently, when it is actually paid, till that day, there will be interest liability. So one has to really see whether it is worth keeping a track of each and every such supplier paying. How do I know whether he has filed 3B or not? It will come in report. But first of all, as it is the way the things are happening, my life is miserable in filing all this reconciliation of 2B vis-a-vis books, how much is of the previous month availed in this month, what is appearing in the books but not in the 2B, then same way, what is appearing to be but not accounted in books, what is of a previous month to be carried forward. All this confusion itself is life is mess. Again, adding this one more aspect to his this mess is going to actually will make him mad. So you may decide looking at the quantum whether to, let me tell you one more thing. All this type of reconciliation is possible only if you adapt technology. Manually doing is becoming nearly impossible. So that is how we always push. You should get into technology. That is where we coming and carry out various programs on technological aspect from our office. So you get enrich and adapt the technology and tools to simplify and easen your work so that you can do your work more efficiently and effectively and smartly. I think that's what to add from my side.
So section 38, as per this is the changes with respect to the GSTR 2B. Okay, as per this new section, this is the change in the section 38. What it is saying is the details furnished by the supplier in GSTR 1 shall be communicated to the taxpayer in an auto-generated statement, that is GSTR 2B. The statement now shall consist of two parts. One part shall consist of details of inward supplies, in respect of which rate of ITC may be available to the recipient, and in the other part, the details of the supplies in respect of which such credit cannot be availed by the recipient. So we'll see what all the contents in this list. So if the supplier is newly registered, in that case, I am not eligible to take that credit. The GST 2B only, it will be marked as an ineligible.
Jagdish, first explain that, is applicable now or not, when it will be applicable.
Not notified, sir.
That's what, because people should not get confused that is applicable. So make it clear in the beginning itself that this is what is then the law and when it is going to be there, after which only it will be applicable. That you make it clear so they can prioritize their understanding. Otherwise, they'll get mixed up with this.
Okay. This has not been notified. So once it's notified, it will be like this. Okay. We'll see what are all the supplies which will be restricted in the GST 2B. The supplier is newly registered. How much new, we don't know, not yet prescribed that period. Within what period we can avail the credit from the new supplier. And if the supplier has continuously defaulted in payment of tax, either non-payment of tax or not filing of the returns or paying the wrong tax, all could be the defaulted in payment of tax. In that case also, I am not eligible to avail the ITC from the supplier. And my supplier has understated the liability in GST 3B, had declared the more liability in GSTR 1 and declared the less liability in GSTR 3B. In that case also, recipient is not allowed to avail the ITC. Whereas and the supplier has availed the ITC more than what he is allowed to take the ITC. That is, he has availed more ITC in 3B than reflecting in the 2A. In that case also, ITC will get restricted in the GST 2B itself. And supplier who has not complied with the 99% rule, that is as per section 49(12), that at least the persons covered under this section is required to pay at least 1% of the output tax liability through electronic cash ledger only. And such suppliers as may be notified. In all these cases, ITC from these recipients will be marked as ineligible in my GST 2B. It will not flow from my 2B to the GST 3B eligible ITC. Okay, we'll see with example this one.
Before that, I want to just explain a couple of points here. Okay. Please note that this particular section 38 is a sort of a ideal situation which the government is looking at and protect its own interest, not the interest of the trade. It is seeing all the scenarios where the credits availment system can be misused. Wherever the government felt that the credit availment system can be misused by the taxpayers, they have identified those areas and are only holding back. They are not completely denying you the input tax. They will be holding back that credit for some time. So it is like this. You have deposited your check into bank. The balance is credited, but it will say uncleared balance. So how you cannot draw your uncleared balance from your bank account in ATM. Similarly, this amount which appears, though it is coming to your portal, it is not available for you for availment and utilization. So it is of that nature which the system which they have designed. In fact, a lot of representation went against this. So presently it is kept in abeyance for its implementation. So if it gets implemented, we have to see. Again, all this, whatever the move, in my personal opinion, with the due respect to the government, are against the principle of a free flow of a credit. My cash flow is getting impacted. I always thought the GST scheme, I would have decided my pricing, my cash flow, my operations, my margin based on the understanding that I'm going to get this much of input tax credit. If my input tax credit itself is under the stake, where did the promise of free flow of credit gone? They increase the rate from certain percentage to a higher percentage, saying that you will be getting an input tax. When I am not getting an input tax on the one hand, at the same time they are demanding a tax at a higher rate. Where did the promise of ease of doing business go? These are the questions which are being asked by many of the industry. Somebody should probably, the government should look at these aspects for a better and proper implementation of this particular tax law. Okay, over to you, Jagdish, for example.
Okay, we'll see this example. As of now, section 38 is below. So if my ITC as per my book sheet 25 lakh and ITC what reflecting in GSTR 2B is 22 lakh. So out of 22 lakh, my eligible ITC is 20 lakh in my GSTR 2B. Then maximum ITC I can avail for that period is 20 lakh. So after if section 38 is implemented, what we propose, so scenario would be like this. My total ITC as per books is 25 lakh, and in the 2B it is reflecting 22 lakh. Out of 22 lakh, my eligible ITC is 20 lakh. So from here, the new thing will start. If my supplier is newly registered and I have received the ITC from the new supplier is 1 lakh, then in that case, I am not eligible to take the credit. 2B itself will restrict that credit, and in that case, I am maximum ITC I can avail in, after removing that rate is 19 lakh. If supplier has filed his GSTR 1, but not filed his 3B, and credit flow from that supplier is 50,000 to me, and the maximum ITC that I can avail is 18 lakh 50,000. We have to reduce like this. And supplier liability, supplier has declared the less liability in GSTR 3B compared to the GSTR 1, and supplier has availed more ITC than what is reflecting in his GSTR 2B, and supplier has continuously defaulted in payment of the tax. In all these cases, ITC will be restricted in GSTR 2B, and it will not flow from 2B to my GSTR 3B. It will be marked as ineligible in the GSTR 2B. Even what we discussed in the rule 37A will take care of by 2B only if it's get implemented. So hope this example is clear to you all.
Yeah, I think firstly that heading should be changed from amount disallowed to amount restricted. So disallowed is different from restricted. It is not disallowed, it is restricted. Okay. It is temporarily suspended for you to take a credit. Second, there have been a question, one of the questions suddenly popped up where it says, how do we know that is a newly registered or not? So let me tell you, all these things will be not at all within your control. Portal itself will say this is the amount which is uploaded, out of which is restricted, and out of which you how much is freely available. There's the example which I told you. In a bank, it shows your balance is so much, whereas uncleared balance is so much, available for drawal is so much. Same way, total it will be saying 22, but removing all these factors, whatever remaining only will be available for you to take credit. So you need to, you need not worry. They will take care of your accounts. So they will be monitoring all these things. You only thing is they're actually tying up your hands so that you don't get more credit and they get more cash inflow for their expenditures. So this is effectively, it is going to happen. I think there's one more question. If we have refund for 2 months continuously, how to comply with rule 99%? There's a question, Jagadish. Can you answer that?
Yes, sir, that we will discuss in the next slide. Next slide is about that only.
Right. And there's one more question which is there. Uh, there is no system to check and confirm suppliers consider our bill in 3B when he has filed. Again, that aspect is taken care by one more aspect. If somebody's GSTR 1 is more than 3B, automatically that's also coming into restriction. So it is automatically taken care. That will be gone as a recovery against them. There's one more amendment to that effect, which I think Jagdish is going to handle that. So we'll cover that. So you need not worry until unless it is coming in GSTR, you are 2A, and he has filed 3B, filed is tick. Then as far as you are concerned, that condition is said to have been fulfilled. One more question is, vendor A is in Mumbai who has issued charge CGST instead of IGST, invoice dated so and so, we availed CGST as input, query, do I need to reverse ITC and pay tax? Please note, I hope that the person who has raised this question is not in Maharashtra, but in other state. So if he is in the present state, that is in, say, in Karnataka, and that person has charged this wrongly, but you have taken it as IGST input tax, he can do a correction through paying IGST and claiming a CGST refund from his end and give a declaration for 1718, a similar thing what we discussed, so that you can take a proper credit of that aspect of it. You can substantiate your ITC provided you have taken it as a IGST credit. What if we have taken a CGST and SGST credit? There, the question here is, we have availed CGST. First of all, there is a challenge because Maharashtra SGST you cannot take input tax credit in Karnataka. IGST, there is a differing view. Though one of the view is that IGST throughout the country you can take, but in my opinion, that's also not correct. So first of all, you cannot take a CGST, SGST, which is paid in some other state when we have we are located in different state. We can only interstate credit can flow if it is a IGST. This is a thumb rule in which the way it is designed. So you can look at it from that perspective. And somebody, I think, so for the question, how do we know when is registered? You can just go to GSTN portal. There is a registration which is there. Search. We can get that details is what has been told. I think, Girish, you can proceed further.
Rule 86B. The new rule 86B has limited the use of ITC balance for paying its output tax liability. So based on the rule, maximum ITC that I can utilize to pay my output tax liability, 90% of the 99% of the output tax liability can be paid using my input tax credit. This means 1% of output tax liability to be paid in cash, that is through electronic cash ledger. So we'll see the applicability of this rule. This rule is applicable to the registered person having taxable value of supply other than exempted supply and zero rated supply in a month is more than the 50 lakh. So this limit has to be checked every month before filing each return. So whose turnover more than 50 lakh, excluding other than the exempted and zero rated turnover, in that case, this rule will apply. So we'll see what are all the exceptions to this rule. The person, a proprietor, karta, managing director, the partners of the partnership firm, whole-time directors, members of the managing committee of the association, are the trustees of the board, at the case may be, who have paid the income tax more than 1 lakh in each of the last 2 financial years. For them, this rule will not apply. And the registered person who has received the refund amount of more than 1 lakh in the preceding financial year on account of unutilized ITC, for them also will not apply. And the registered person who had discharged his liability towards the output tax liability through cash ledger for an amount exceeding the 1% of the total output tax liability. So This applied to cumulatively to till the filing of the return, and the person who is the government department or the public sector undertaking or a local authority and statutory body. For all these persons, this rule will not be applied. So now we'll see the ITC eligibility with respect to the transportation of the goods outside India. As per the section 12, subsection 8, place of supply with regard to the transportation of the goods to outside India, either place of destination of the goods, either place of supply. So the circular 184 has further clarified that IGST has to be levied as supply is located in India and the place of supply is outside India, then IGST has to be applied. And further, it has also given a clarification that how to report report it in the GSTR 1. It has to be reported in the GSTR 1 by selecting the state code as 96. That is foreign country. So in the GSTR 1, I have to report it as an IGST, and place of supply I have to give it as a 96 as state code. So circular has gave the clarity with respect to the eligibility of the ITC also. So what the circular is saying is ITC having the place of supply as outside India. So ITC can be availed in respect of that transaction. So the recipient of such transportation services shall be eligible to avail the ITC subject to the fulfillment of the conditions provided in the section 16 and section 17 of the GST Act. So there is no restriction in availment of ITC in respect of the export freight. This is you will apply to the export freight. So taxability of the no claim bonus. First, we will see what is the no claim bonus. No claim bonus is the deduction from gross insurance premium when no claim is made by the insured person during the previous insurance periods. So what the circular is clarifying that no claim bonus cannot be considered as a consideration because there is no supply by the insured to the insurer company in the form of refraining from the act of lodging the insurance claim. So because of this, this cannot be the deduction what the insurance company is giving the deduction to the insurer as a that cannot be considered as a consideration. It cannot be treated as an agreeing to the obligation to refrain from the act. So no claim bonus is a permissible deduction under section 15 for the purpose of calculation of the value of the supply. So accordingly, when no claim bonus is provided in the invoice, GST shall be payable only on the net amount. That is after reducing the no claim bonus, then only we have to pay the GST on the net amount. So it is not taxable. So coming to the block ITC.
I think Jagdish, there are two questions on the previous slide, previous to this. That
what
is
between state 96 and 97. 96 is foreign country, whereas 97 is other territory.
So no, he's asking what is the difference between that? What is other territory? What is foreign country?
Foreign country.
When do we fill up 96? When do we fill up 97?
Here in the circular, he clearly mentioned that he has to give only the 96.
See, there may be a situation where SEZ aspect of it will coming in. So yes, that's the interstate supply, but within the state. So you can mention it as other territory because it's not a foreign territory.
Yes.
Okay. So that is between 96 and 97. Coming to the next thing, the slide which Jagdish explained, it is, let me tell you, that is not connected to goods. That means it is not a related taxation of goods. It is relating to services of a transportation of goods outside India. So the clarification is in the context of a service of a transportation of goods. So it will not impact the goods valuation. It is nothing to do with the taxability of a goods in question. It is to do with the taxability and ITC of the services of a transportation. So this confusion is there with many, because this section 12(8) is for the place of supply determination in respect of supplier and a recipient are within the country, whereas 30, and it is for services only, it is not for goods. Goods comes 10 and 11, whereas services is 12 and 13. So this clarification is in the context of the services and not that of goods. Proceed.
Okay. So coming to the block.
Yes, no claim bonus aspect is concerned, majorly we may be not interested because we don't do insurance business. But one thing which we need to see is whether there's any possibility of adapting this clarification into our business scenarios is what you can try to see. Adopt the rationale given in this clarification for our benefit. Majority of the normal trade, we may not be coming across this issue. Go ahead, Jagadeesh.
So blocked ITC. So ITC would be available on any goods or services which are mandated to be provided by employer to its employee under any law, including food and beverages, life insurance, and rent-a cap. And further, it is also clarified that ITC is blocked only on leasing, renting, and hiring of motor vehicles, vessels, or aircraft only, and not of leasing, renting, of hiring of any other items. So blocking of the credit would be there only in case of leasing, renting, and hiring of motor vehicles, vessels, or aircraft, and it cannot be applied blanket on whole of leasing, renting, hiring of any other items. So coming to the employer to employee perks. So what the circular 172 said is it is not taxable, because if the perks provided by the employer to employee are in view of the employment contract, that is as per the he is providing the perks as per the contractual agreement, then those perks are not taxable under GST. So this is the clarification given in the circular number 172. And moving on to the next, and some clarifications that has given in the 177. And whatever the fee charged by the educational institutions from the prospective students for admission, entrance test, and for issuance of various certificates like migration certificate, transfer certificate, for all this, whatever the fee collected by the education institution from the students or the prospective students, that will covered under serial number 66 of exemption notification number 12/2017. So all these services are covered under exemption. So GST will not be levied. And coming to the selling of space for advertisement in souvenirs published as books. So sale of space for advertisement in souvenir book would come and advertisement in print media, and therefore eligible for the concessional rate of tax at the rate of 5% in terms of entry number 2 of notification number 11/2017. So PLC, preferential location charges collected for long-term lease of land. What is the GST on this? So the PLC, the preferential location charges collected in addition to the lease rentals for long-term lease to be treated as upfront lease charges, and therefore eligible for exemption. That upfront lease charges are eligible for exemption in case of the long-term lease, and therefore the PLC charges which are collected along with the long-term lease rentals will also covered under the exemption. Additional toll fee collected from the vehicles which are not having the fast tags. So we used to see the toll plazas will collect the additional fee from the vehicles which is not having the fast tags. So GST implication, what would be the GST implication on this? Such additional toll fee which is collected will also be treated as par with the toll charges, because they are collecting the charges for accessing the road. So these charges will also be treated at par with the toll charges. So whatever the rate that is applied to the toll fee, the same will apply to this also, the additional charges also. And sale of land, as we all know, that sale of land is covered under the Schedule 3. Here the issue is whether the sale of land after leveling, laying down of drainage lines or roads, etc., whether it is covered under the Schedule 3 or not. The circular clarified that sale of land even after leveling, laying down of drainage lines, roads, etc., will also be covered under the Schedule 3, and accordingly GST will not attract. However, services provided for leveling, laying down of drainages, roads, etc., will be subject to GST at the applicable rates. Coming to the RCM liability, renting of partner transport motor vehicles. In the circular, it is clarified that where the body corporates hire the motor vehicles for the period of time during which the motor vehicles shall be at the disposal of the body corporate, then the service should fall under the heading 9966. And the body corporate shall be liable to pay tax on the same under a reversal mechanism. So where the body corporate avail only the passenger transport services for specific journeys or voyages, and doesn't take vehicle on rent for any particular period, unlike the 9966, then the service should fall under the heading 9964, and the body corporate shall not be liable to pay GST on the same under reversal mechanism. In case of passenger transport service, no trigger of RCM, whereas the vehicle is at the disposal of the body corporate, which is covered under the heading 9966, then only RCM will get attracted. So coming to the next one, hiring of vehicles for transportation of employees to and fro from work. As we know that 12/2017 exemption notification covered the hiring of vehicles for transportation of the passengers in a non-air conditioned contract carriage that is eligible for exemption. It is covered in 12/2017 notification. So what the circular has clarified that exemption would be applied for non-air conditioned contract carriage or a predetermined route on a predetermined schedule. So renting of residential dwelling and RCM implication on it. If the supplier, whether he is a registered or the unregistered, has rented the residential property to the registered person, then the registered person is required to pay the tax under reverse charge mechanism at 18%, whether he used that residential property for residence or not. And ITC on that, if he uses that residence in course of the business, then he is eligible to avail the ITC. Whereas he uses that residential dwelling for the personal use, then ITC cannot be availed. And recently, the circular has given clarity that if the residential dwelling has taken by the proprietor or partner of the firm, rents that residence for the personal use, then it is not taxable. Whereas for the business use, then it is taxable. So
okay, here I want to just highlight the fact this mechanism is applicable in a scenario where it is renting of residential dwelling, inverted commas, you can note down. The property which is being rented out should be a residential dwelling. Whether the property in question is a residential dwelling, when it is residential dwelling, when it is not residential dwelling, there is no clarity yet. For example, your house is in the main road. You have converted its electricity usage into commercial, water connection into commercial, then still can it be called as a residential dwelling or not? There is no clarity. One of the view is that originally the property is meant and to be used for residential dwelling, hence it is a residential dwelling. Its usage would not determine the fundamental nature of that particular property is one view. Other view is once a residential dwelling is put to use as a commercial for commercial purposes, including like office, it is no more remaining to be a residential dwelling. Hence, this RCM is not applicable is another view. Having said that, we always suggest that taking a conservative view, wherever there's element of doubt, better you pay tax under the RCM and avail input tax wherever you are eligible. Jagdish, you can proceed, please.
Yes. So the time limit for adjusting the credit notes and the debit notes. Earlier, before the due date of filing the GSTR 3B for the September month, we have to adjust. But from now till September, we have the time limit to adjust the credit note or debit note. Okay, so that's the time limit, and time limit for availing the ITC. So earlier, a time limit for availing the ITC of the previous financial year is on or before the filing of the due date of filing September month return. But after this change, we can avail the ITC of the previous year up to the 30th November of next financial year. For both the things, the due date is the same. Adjusting credit note, debit note, and the time limit to avail the ITC. So tax invoice issued by the e-commerce operator, where any taxable supply through the e-commerce operator, then he required to give the name and address along the PIN code of the unregistered person to whom the invoice issued in his invoice. This is at rule 46. So that address is deemed to be is in his records. So coming to the e-invoicing provisions. So with effect from 1st October 2022, the taxpayer whose aggregate turnover exceeds 10 crore in any of the previous financial year, that is from 2017-18, then e-invoicing provision for B2B and export transactions is mandatory. So absolute exemption from e-invoicing. Circular 186 by 18 by 2022 has given clarity that we'll see in terms of notification number 13 by 2020, certain sectors or entities has been given exempted from mandatory generation of e-invoice as per rule 48 sub rule 4. It is clarified. So we'll see what are all those sectors or entities. So government department, SEZ units, insurance companies and financial institutions, GTA or passenger transport service providers, and multiplex theaters. All these sectors or entities have given the exemption, absolute exemption from e-invoicing. It is clarified that the said exemption from the generation of e-invoice for the entity as a whole and is not restricted by the nature of the supply being made by the said entity. If let's take insurance company, let's say they have sold some bonds, goods, whether they are required to generate the invoice or not is the issue here. What the circular has clarified that whatever the supply by the insurance company, all the things invoicing is exempted. They have given exempted as an absolute exemption. That exemption is not given based upon the nature of the supply. So declaration of the invoice by
I think Jagdish, couple of points there. The another example would be that bank also sells gold. Some of the bank is exempted. There is a financial institution. So when they say raise an invoice for gold sales, should they actually raise a e-invoicing? Answer is no. Same way GTA may also do some loading unloading charges separately bill for it. Whether they are required to raise a e-invoicing, with this circular clarification, it is no. And I think, Jagdish, there are a couple of questions on the previous slides.
Sure.
They wanted you to explain the motor cab RCM once again, and also this 30th November. Can you please clarify how date of 30th November can practically be used?
Practically, the October month 3B is the last date, sir. 3B of 1.
See, I'll explain that part of it. The RCM, you can repeat it. Okay. Please note that for their they want to freeze the date of filing as a important event, not the return period as a criteria. So what they are trying to say is, when you are filing a return for the month of October, 20th November is the due date, but they have given you extra time of 10 days for any other reason. So even if you can file up to 30th November, within that period, you should have filed the returns of whichever the earlier months you are claiming those or adjusting those things, and have reported that before 30th November. See, look at it from a little different perspective. This particular law is not a one government's law. It is a law of a multiple governments. They have to settle their accounts. They cannot keep their accounts open forever. So with all these cutoffs, what they're trying to do is, they want to settle their accounts on cutoff date of 30th November. Based on that, they'll compute, and probably by December, they will be given a credit and debit of the accounts to the respective states. For that, they're ensuring many of the amendments, even when Jagdish talked about e-commerce operator, the state code is important, because they want to see which state the tax should go. So they found that there are some practical difficulties in computing the taxes which should go to which state, wherever there was the issues and problems. They're trying to bring in the law specifically so that there is no difficulty at a later point in time. So look at it from that perspective, you will realize that what is the purpose and objective of these amendments. Whether legally it is viable or not, it is a matter of time to tell. Okay. Right. Coming to the RCM of vehicle, I think Jagdish, you can explain quicker, because we don't have much time for other slides.
Okay, sir. I will cover it quickly, sir. If I take the vehicle for the specific route only for the transportation of the passengers, let's say I have hired the vehicle and I have and asked him to drop the passengers from one place to another place. Let's say from workplace to their home, and pick from their home to their workplace. If the agreement is like that, then it will fall under the heading 9964. That is the passenger transport service. In that case, RCM will not get triggered. Okay. Whereas in the other case, I have taken the vehicle on rental basis. The vehicle will be with me for 1 month at a specific period. For 1 month, it may be 1 month or 2 months or 3 months. So vehicle will be with me, and I can use as per my usage. So in that case, it will fall under the heading 9966. If it fall under the 9966, then the RCM will get triggered. Then the body corporate is required to pay the liability under RCM basis. Okay. Hope it is clear. If anything is there, we'll discuss at the end. So in the previous slide, we discussed to whom are all the invoicing provisions are exempted, even though the turnover has more than the turnover what is prescribed under Rule 44. Those persons are required to give the declaration in their invoices that they are exempted from e-invoicing. E-invoicing. The declaration should be as follows. We hereby declare that though our aggregate turnover in any preceding financial year, that is from 2017-18, more than the aggregate turnover under sub-rule 48.4, we are not required to prepare an invoice in terms of the provisions of the said rule. So all those persons are required to give the declaration on their invoices that they are not that they are exempted from generating e-invoice, even though the turnover is more than the prescribed limit. So coming to the e-invoice come bill of supply. This is the rule 46A. So only if the registered person supply both taxable as well as exempted goods or services to an unregistered person, then he can issue the invoice come bill of supply. This is applicable only supply to the unregistered person. If the supply is made to the registered person, he cannot issue the invoice come bill of supply.
I just want to practically cover some of the points on this, the declaration on invoicing, not only in this condition differently. Please note that if a person who is required to raise a e-invoice, if he has not raised a e-invoice, as per the provisions of the law, that is not at all an invoice. In fact, many cases, while transportation, they are able to check what is the turnover, whether he is liable to raise a e-invoicing. In cases where any taxable, that registration number is liable for raising a e-invoice, but he has raised a normal invoice in the course of transportation, they are holding it back, saying that you have violated the provisions of the law and initiating a proceedings under section 129, detaining the vehicle and asking them to pay a penalty equal to 200% of the tax. So be aware that it is not only your responsibility of ensuring, you should also take a declaration from all your suppliers, wherever possible, who is going above certain limit, that they are not liable, or whether they are liable, whether they are raising a e-invoicing. They're not raising a e-invoicing and they have raised a normal invoice and you have taken an input tax credit based on that. Later on, after 3 years or 4 years, when the audit comes in, they can always, they'll have a, on their system, these are the fellows who were supposed to raise a e-invoice, and that registration number, you do not have an e-invoice, so they may deny a credit. Rather than suffering later, try to ensure now only that wherever the supplier is liable for raising a e-invoicing, at least even now they can generate e-invoicing. I don't know technically if it's possible. They shall get that thing done and get a proper documentation for your record. Otherwise, you may be denied with the ITC. Proceed, Jagadeesh.
Yes, with effective from 1st November 2022, the registered person whose turnover is more than 5 crore is required to provide 60-digit HSN in his GSTR1, whereas the registered person whose turnover is less than 5 crore is required to give 4-digit HSN in table 12. It is a mandatory thing. Okay. Sequential filing of GSTR1 mandatory. Earlier, unless with this change, unless the previous period GSTR1 has been filed, this period GSTR1 cannot be filed. So coming to the rectification of our errors, if any errors or omissions are there in the GSTR1, those can be rectified on or before 30th November of the following financial year, or before the due date of filing the annual return. That is earlier of the 30th November or due date of furnishing of the annual return.
Not due date, is a date of furnishing.
Date of furnishing of annual return. If I file the annual return on October, then I can rectify the errors or omission before the October only.
Practically, nobody will file earlier. Okay. Go ahead.
Yes. Coming to the differences in the GSTR 1 and 3B, is the new rule 88C. If there is pictorially, I have given in the okay. So rule 88C, it says how to deal with the difference between if there is a difference between GSTR 1 and GSTR 3B. If my GSTR liability is higher than what I declared in the GSTR 1, it's okay, fine, because department is getting more than what it supposed to get. And if my 3B liability is lower than my GSTR 1, then the department will give the intimation in through form GSTR 031B. So against that, if we accept, then pay through DRC 03 and communicate the same to the department through part B of DRC 0301B. And if you are not agree and remains unpaid, if you are then if you have given reply but department has not accepted, then recovery proceedings will start under section 79 through DRC 07. And you are also not allowed to file the return GSTR1 for the subsequent period. Subsequent period. Just a second, Sharon.
Please note that this particular rule is in the context of section 75 subsection 12, which says that any admitted or self-assessed liability remains unpaid, that is liable for recovery straight away. However, there was challenges which said that there may be some clerical errors due to which there would have been excess declared in GSTR1. Initially, directly initiating recovery would be unjust, improper, you do not give an opportunity. All those issues were there. So in order to address that particular concern, this new mechanism has been added, but we do not know how practically it's going to work. Again, it is going to be a one more burden on the taxpayers, because obviously when you file a reply, I do not know how many of the reply will be accepted so easily, and how the documentation instruct will be verified. I say by mistakenly I uploaded one invoice number twice, or something you may B2C, I uploaded one invoice both under B2B and B2C, due to which the turnover is more. If you give this explanation, how would the officer will be able to ascertain within that period? It will get into a thing when there's a short payment or non-payment is there. There's a separate section under 73, 74. They should go to 70, 74. Here, it is clearly a disputed liability, not accepted liability. So they should not have been this mechanism. This mechanism is going to create much more hazards. In fact, this provision came in because they said even GSTR1 is not a return at all. It is merely outward supply statement. They added an explanation to say, even though it is outward supply, for the purpose of the section, whatever the it shall be treated as a return, so that through which they can initiate 7512. All this is going to add much more pressure onto the businesses. So you have to be very cautious while filing your GSTR1 and subsequently 3B. So you cannot be casual about filing your values in your GSTR1. So that is very, very important point which you need to note down. Jagadeesh, proceed, please.
Yes. Now, non-resident taxable person required to file GSTR 5 on or before the 13th of the following month. Earlier, this due date is up to till 20th of the subsequent month, or within 7 days after the last day of the period of the registration. So earliest of the below 2 dates, they need to file the GSTR 5. So portal has given the option to file the nil GSTR 1 in 2 clicks. Just by checking box the nil return, directly it will retrieve to the sign-in page. So facility, and as we know that by filing PMT 09, we can transfer the cash balance in the electronic cash ledger from one head to another head. Now it is allowing the transfer of balance from one GSTN to another GSTN of the same PAN. This transfer will be allowed only if there is no outstanding in the electronic liability ledger. And one more thing is that the transfer across CGST and SGST will not be allowed. Only CGST and CGST you can transfer against for SGST and SGST you cannot inter-transfer. Inter-transfer heads is not allowed.
SGST cannot be transferred because SGST of that state will be different from SGST of this state.
So coming to the returns, so Four new tables have been inserted under GSTR1, that is table 14, table 14A, table 15, table 15A. These tables are for reporting the supplies made through the e-commerce operator and by e-commerce operator. You'll see what all these tables are. Table 14. So in table 14, what are the supplies made through the e-commerce operator, on which e-commerce operator liable to collect tax under section 52 or liable to pay tax under section 9(5). All these supplies are reported in the table 14. What the amendments with respect to the supplies, what are all reported in the table 14 are required to report in the table 14A. So table 14 and 14A is for the actual supplier who is making supplies to the e-commerce operator are required to report in these two tables 14, 14A, whereas the e-commerce operator in table 15 and table 15A is for the e-commerce operator, on which e-commerce operator is liable to pay tax under section 9 subsection 5. In table 15, he has to give separately for registered and unregistered. There will be two parts. One part he has to declare the supplies made to the registered parties, and in the other part he has to give the supplies supplied to the unregistered recipients. Now, in table 4A would now include the supplies through e-commerce operator attracting TCS under section 52. Earlier, all these supplies are reported in table 4C. Now, table 4C is omitted. So, all the supplies which are supplied to the e-commerce operator, which are attracting TCS under section 52, are required to report in the table 4A. Now, these tables are not yet notified in the GST portal, not yet there in the GST portal. Details of the refund voucher, yes. Details of refund voucher is required to be netted off from the advances in line with the current operationality of the GST portal. We have to show the net figure only. So TDS or TCS cancellation. So this facility has introduced to enable the registered persons who are no longer to deduct or collect TDS or TCS. They can go for the cancellation of registrations. So safeguarding registrations. So this is a new thing. So based on data analysis and risk parameters, the GST portal shall select the registration applicants for physical verification. Such verification would include biometric based Aadhaar authentication and capturing the photographs of the applicant and verification of the original documents at the notified facilitation centers, as well as physical verification of the place of the business. Only after that, the registration will be granted. The applications which are selected for physical verification or this type of verification, then the time limit is not 15 days for issuing the registration, it will be the 30 days. So PAN at the time of the registration, GST registration, PAN will be validated with the mobile number and email address linked to the PAN. So from till now, what GST portal, whatever the mobile number and email ID we are giving, it is validating. But from now onwards, PAN will be validated with only the mobile number and email ID, which is linked to the PAN. So what are the contact details are there in the database of NSDL? Only with those contact details only we can validate the PAN. So as a trial, only this biometric based Aadhaar authentication has implemented in Gujarat only on trial basis. So claim of refund, refund of taxes by unregistered parties. So this circular number 188 prescribes the manner for filing of refund application by the unregistered parties, unregistered buyers who has borne the incidence of tax in case of cancellation of contract or agreement for supply of construction of services of flats or buildings, etc., entered into with the builder, or in case of premature termination of long-term insurance policy. So the circular prescribed the manner for filing the refund application by the unregistered parties in case of cancellation of contract or agreement. So what the circular is clarifying that in such case of cancellation or termination, where the time period for issuance of the credit note by the supplier under section 34 has not expired, then the supplier can issue GST credit note for that amount. He cannot go for refund. Only after the completion of the time period prescribed under section 34 for issuing the credit note, only after that expiring the time limit, then only he can go for refund. So we'll see the procedure. What is the procedure for claiming that refund? So procedure for filing the refund application. To apply for the refund, new functionality is introduced in the GST portal to apply for the temporary registration in the GST portal. On registering in the portal, we will get the temporary ID. Based on that ID, we have to apply for the refund under this section, refund of unregistered person. Refund of unregistered person in the form RFD 01. So for this, Rule 89 has been amended by notification number 26/2022 to provide the documentary evidence. What are all the documents required to be furnished along with refund application to establish the refund due to the applicant. We'll see what are all the documents required to file the refund in the cases. The statement containing the details of invoices like invoice number, date, the value, tax paid details, and details of the payment to supplier, along with the copies of the invoices and the proof of the payment, and copy of the agreement or the contract entered with the supplier, and letter issued by the supplier for cancellation or termination of the agreement or contract, and certificate issued by the supplier stating that he had paid the taxes with respect to the supply to the government, and he had not issued the credit note with respect to that supply.
Okay, I think Jagadish, the previous thing can just these refunds are something which we need to know, because wherever as a recipient, supplier has charged you wrongly, mistakenly, exempt supplier has charged, he has charged higher rate. This recipient can also go ahead and claim a refund. There is no bar for it. It's not necessary that always the supplier only should go and file a refund. Even the recipient can also go and claim a refund. That is inbuilt in the refund provision. However, practically it was not enabled in the portal. This is what, through this it is actually enabled to unregistered. Even a registered person can still go ahead and claim a taxes which has been charged extra over and above what was required to be charged. So in cases of a disputes between the parties as to what is the tax which is actually required to be paid, which is paid, if there's a dispute, the supplier would always try to charge at a higher rate. So in such a scenario, if you feel that what was not required to have been charged higher rate, there's nothing, and where especially when you are not able to take an input tax credit, you're always free to go ahead and claim a refund of such excess taxes paid. In addition to the scenario, whatever has been listed out over here. This is one more point which you can keep in mind. In fact, many time the time period is that 2 years. In any of your cases, known cases where 2 years have still not lapsed from the date of cancellation, especially in a scenarios where there's also a further extension given due to pandemic. The period from March 2020 to February 2022 is suspended in counting the time limit of 2 years. So excluding that time period, if still somebody is well within 2 years time, they can always go ahead and claim a refund of this nature. I think this is something which you can note down. Okay, I think some question has come. Jagadish, after this you can clarify, because we have already substantial time of Dillibabu. There's one question. I think Venu has also joined, who was supposed to be taking. So there's some question. Earlier we have been collecting TCS, and later 194Q adopted and received declaration in first time in last assessment year. Should we receive the same declaration on every year? I'm not clear with this because it's something to do with the income tax. So probably we'll not be able to address that. Okay. Jagdish, next slide you can go, and then we'll take a questions and then conclude the session for a technical session. I mean, technology thing.
So specified officer, these are all
they're more to do with the procedure.
yes.
And again, appeals.
Things.
Again, this is again related to appeal. We are presently handling prior to litigation. We'll not get into this. Next.
So
any questions? You can please post. Otherwise, I think we can conclude and hand over the session to Dillibabu for anything specific to the. Yeah, these are all not cover. I mean, applicable in general. Those are specific scenarios. I think we not worry about those points. You can go to last slide and conclude, Jagdish.
Yes, sir. These are all only procedural things. That for payment of the tax, now IMPS and UPI is also enabled.
Yeah. Okay. Thanks, Jagdish, for your wonderful thing. In fact, for pitching at the last moment, holding the field. Venu was in some national level seminar at Kolkata, so due to which he couldn't take. In fact, immediately after the session, he has joined. He is also online. Venu, if it's possible for you to put up the video.
No, sir, I've just stepped out. Yeah, firstly, I'm sorry.
No problem, no problem.
But I'll be there sometime.
Yeah, fine. Okay, I think Dillibabu, I think over to you for you to take the technology session, please.
Thank you, sir. Thank you so much for giving this opportunity. Thanks for beautiful session on GST updates. Yeah. Let me start technical session, part 2 of today's session. Yes.
So, till Babu brings up his screen, participants, I want to mention one point. See, we as a finance professionals, day in, day out, we work with Excel. It's very important our Excel proficiency should go up. In today's session, of course, some of the people say macros are little high level, but however,
Yes.
we want to do a data integration from Excel to Tally. So what we have done is this file would be shared. You can think we are only showing you one example, but you can extrapolate and say that this is applicable to anything that you think of, and how you can do an integration of data from Excel to Tally and to update some of the masters is what we will display. And when you have a large data, how do we handle the large data? There are two key takeaways, and we will look at some formulas. Yeah. So Babu, over to you. And wherever you support, just call me.
Sure, sir. Thank you, sir. Just give me a minute. I'm sharing the files practice link. As Venu mentioned, these are all the very important for accountants and day-to-day practices who is operating the data entry or generating reports. The major top 4 is, as we are covering today, the number 1 is automatically getting reports from Tally to Excel, just to fresh up the button. Then if you have larger data, how to handle in Excel. There is a beautiful modules in Excel. Maybe we need to know how to handle, then how to operate that one. Based on that, you can analyze your data. Then one more beautiful thing, functions, new advanced functions. There are dynamic formulas like XLOOKUP, VLOOKUP. VLOOKUP is old one, but recently the dynamic functions they released almost 20-25 functions are there. In that, I took up 5 formulas. These are all regular useful formulas. If you are using that one, your the report performance also will come very beautifully. Another one, getting update of some missing information in masters or creating masters using Excel without any macros. We'll count this one. These are all very, very important for regular operators. Just I'm sharing link for your practice. Yes. Yes, is my screen is visible to all?
Babu, it's visible.
Yeah, thank you, sir. Thanks for confirming. First, we'll see how to check existing ledgers in Tally from Excel. From that, we'll start today. Today's our session. Maybe if you know bit of technical knowledge or SQL, maybe you can easily extract all the masters and reports from any database if they're allowing. Otherwise, if there is security controls, if you use the credentials, you can extract from any applications. Same thing also available in Tally, SQL, but there is no update option. We can extract. If you want to update, you have to post from backend. That is the option. In Tally, there is some limitations, but using SQL query, we can extract all the data tables from Tally. First, I'll show you how to see, how to extract or how to connect ledger master to Excel. Maybe this function is available more after 2010 version. If you're not, if it is not available, maybe you need to download Power Pivot add-on from Office website. Then it will automatically come. These are all the features. Okay, otherwise if your Office 365 edition, if you're using, it will come automatically. Okay, so here from data tab, there is a group get external data. Here there is an option from other sources. From other sources, there is an option from ODBC. For ODBC, there is one option in Tally. If it is enable only, then we can able to extract from external applications. Here advanced, see from gateway of Tally F12 configurations, advanced configurations. Here the first section only client server configuration. Here we need to enable both, and ODB says yes, port you can give anything. The same thing should only whenever you connect from third party application, you need to give this port. By default use, I recommend 9000 only. If it is more high security is required, you can change something else. This is the first primary connection. If you allow from Tally application, then only you can able to extract data from third-party applications like Excel applications, some other applications. So data tab, new query there from other sources. We selected ODBC. In ODBC, it is showing some options, including Tally ODBC. Select that one. From here, there is an advanced option. Here, maybe I'll show you how to extract. It's a select statement. Using select statement, if you know tables, you can extract table with field names. Otherwise, if you want to check complete tables, you need to use star. Star means it will give all the fields result. Here I'm not using star, just I know the table names. I'm using table name, comma, dollar parent, comma. I'm just fetching name and parent and primary group from ledger table. This is table. It will connect from Tally and it will fetch data and it will show you. Give me a minute. Close that open sometimes. What do we see? Error will come. Settings is proper. Just a minute. Something I did spaces something extra, that's why that's not fetched. Okay, anyhow you can see this code. It's a select statement, name, parent, primary group, and closing balance. I fetch it from tally. Then we can connect to Excel. See here we can able to see complete ledger master with closing balances. If you want to add more columns, we can add. I'll show you how to add. Why I'm doing this one, for creating without any macros, now we are able to get data to Excel, but without using any other softwares and macros. Now we are trying to create ledgers and altering ledgers. I'll show you after this one. See here I want to see GST numbers of these names, these parties. For that the tag name is party GSTN. Suppose I want to see the state also. For state the tag name is state name. I'll show you how to get these tag names. See, I extracted party name and state name also. Then we'll connect to Excel. So there is no party names, there is no state names. Okay. Now we'll update GST numbers to some selected parties. I show you, this is very beautiful and very simple steps. If you follow, you can update all the masters without any macros, any softwares. See, there are around 8 customers. Now we'll try to update party GSTs. Okay. For this, Tally has given some references. Maybe if you want to follow that references, I have given a link. I'll share you this file also. Maybe if you click this link, it will relate to that page. I'll open and show you. See here, there are Tally accepted formats. They have given complete material. Maybe if you follow, you can do more and more on this one. Okay, just Tally will understand if you post in this method only, Tally can accept the data and it will insert into tables if you want to create or alter. Okay, first we'll see to update the party GSTNs. Anyhow, we have a data. These are all parties. Okay. something I'm changing some numbers. Okay, then just fill down. This is just formula only. This is tally understanding format. I'll show you after constructing this complete data. Only thing, now the first step one, we identified the customers which are all not having GSTNs. Almost in this database, all the customers are not having GST numbers. Okay, first step one, we found the customers list. Second one, there is small method to construct tally understanding format. The step one, you just copy this data. You need to have this data with the GST numbers. Then we will share you this template also. This, just drag it. If you are following me, just same follow me. If you have any doubts, you ask me. Otherwise, the record also we will share you after this session. Okay, this is just a concatenated formula only. This is tally understanding format. We added this two. Then how to convert this to XML and how to import to tally. Why I'm telling XML? Tally only accept XML format only. JSON and other formats it won't accept. Okay, just will open Notepad. Maybe if you have any small technical knowledge, you can easily understand. Otherwise, you just practice 2-3 times, you can understand easily. See this one. I'm adding here. Then I'll explain you this format also once again. See, this is header, this is footer we are calling. Okay, tally will accept this format only. I don't want to explain this in deeper. Maybe if you are a technical person, you just put it into somewhere in XML format structure, you can understand. Otherwise, I'll show you here only. I don't want to say something else. Okay, please. See, this is complete closing tag. Within this tag, our data is there. Second one, headers. This header means is importing of data. Quickly, I'm telling you. Suppose if you are not technical, maybe you can understand. This is a header part. Header part means tally will understand import or export. Then body of data. Within the body, we need to give that import tag. Is it import or export again? Then request description. Is a master or watches or transactions. Then request data. Request data means our required data. Here, this is the tally understanding for format. Here, ledger name, I given something, maybe, you know, customers list. Then action is alter. Maybe I'll show you how to create also. Then I need to update only partition. If you want to update partition, PAN number, some other contact details also, we can add that one. Just then this is my closing part. Maybe if you see, if I select here, it is taking this complete structure. Okay. Okay, this one I'm just saving it to masters new dot XML. We need to save it into XML. Okay, it is saved into F drive. With extension you need to copy, then go to import of masters, then paste this path and modify with the new data. Accounts ledgers alter. We'll see all the ledgers from here and we'll refresh. See, it is, sorry, sundry debtors. All sundry debtors are having GST numbers. See, two things we learned from here. We connected data from tally to Excel using ODBC, or you can call M language also. It will record it will record in data in it will convert data through M language only. First, when we connected, there is no party GSTs. Now we updated just using some small Excel formulas. Just we use only and formula. There is nothing is there in that. We just converted to this format, tally understanding format. We imported. After that, if you refresh, it is giving the updated information. Okay, this is what we can alter. Suppose you can ask how to create with the same method. I'll show you that one also. Just only thing, as I mentioned, Tally has some specified formats and understanding language. You need to put data into that format, then only it will import. For this, there are many methods. You can use another scripts like VBA, VBS, .NET, some other languages. There are many languages you can use and convert into this method, and you can import it without any language knowledge. Just using Excel method, we can do to convert to XML, and we can import to Tally. This is what I'm trying to do from here. Okay. Next, just I'll show you quickly for two things. Just I created two. There is some Tally understanding format. I added that one. Maybe you already received this template. You just, if you want, you just refer this one. Okay, same thing again. Open Notepad. First, we need to do this headers. It is standard. There is no incremental in the standard header format. In create only, if you have multiple edges, you can create. Just I'm creating these two edges. Add these two lines. You copy below. Then go to footer and copy and paste it. See, there is action before you, if you maybe we altered. Now it is create. Okay, then the parent, wherever you want, you can add it. This is a simple format. Okay, you can convert it to XML. Save. It will ask when you are saving, create ledgers.xml. You need to give that extension F drive only. I'm just saving in F drive. Okay. Just take create ledger with extension. Again, go to import. See here in gateway of Tally, import masters. Just paste the path. Create, or you can use ignore duplicates if there is any duplicates. No duplicates. We'll go and check that ledgers are available or not. What are ledgers we try to create? Kiran KS and Murali. Okay, instead of going and checking your Tally, you just refresh here. You will get that one. That is Kiran KS is there. Murali also is there. Any doubts up to here? Three things we did as of now. Number one, we connected ledger masters to Excel. Then we altered and we updated GST numbers into parties master. Then we created some parties through Excel, just using very simple steps. Any doubts up to here? Okay, there is one comment from since we are. So Oracle means are using EBS or Oracle Fusion? Which version you are using? Is it desktop version or cloud version? That's depending on. But anyhow, anything if it is a cloud or desktop version, no issue. Oracle is a, maybe there is more securities. They need to allow. They need to create link for connecting to a third-party application. There are many methods. One is direct method and indirect method. Indirect method is API. Maybe you can ask API. It is a secured method. When it is going through secured method, they will give response. You can connect with anywhere. In Excel also you have a header format. You can request from Excel also. Is my answer clear, sir? Okay, next we'll move to next topic. Thank you, sir. IGST number is wrong. Tally gives alert. Will give alert or not? No. Okay, very good question, sir. This is very interesting question. We are updating from backend and we are inserting into tables. That's why you cannot get any alerts. It won't give. It won't throw also any errors. It will, whatever you give in data table, it will go and sit into the table. We are forcibly inserting data into that field. But if you try to do from front end, the application has that functionality that will give alert. From back end, if you do this kind of activities, you can't get this kind of control. So you have to validate before migrating data and import. Otherwise, again, you need to delete and you need import. There is only one option. Otherwise, through customization, there are some options. We can create some controls and we can put into system. When you are trying to import similar like GST numbers, the system will control. It won't accept wrong numbers. But in the direct method, there is no option. So can you please share the node for this? Sorry, sir, I didn't understand. Nagaraj has sent message. Okay, you are asking notes. Okay. So there is a recording. We will share your record. You can follow that record and steps. You will understand. You just practice 1 or 2 times. You will get easily. It is very simple steps. You can get the results. Beyond that, if you need any help, maybe we will present you. We will share you my email ID, company email ID. You can connect to the email ID. Someone will connect with you, and they will help you, sir. Thank you. Okay, we'll move to next part of today's tech session. Yeah, next is very interesting report. It is also similar like ledgers connection we did, right? It is similar to ledgers connection. I'm just saving it to. Okay, our next topic is very interesting topic. Okay. If you are following, you just follow. If you have any doubts, you ask me through chat. We will clarify your doubts. Otherwise, you can record watch again. I'm telling you. We'll share you the recordings. Okay. Already I shared the soap requests also. I'll show you. You no need to write again and again codes. Or if you have some knowledge on coding, you can alter this code. You can get whatever you want. Yeah, just to extract purchase report, there is a small tally understanding format. I'll show you how it will come the purchase report to Excel. Just only thing I'll tell you overview. Suppose if you are seeing everyday sales or purchases or some ledger monitoring or bank account monitoring, you don't need to go to tally and open. Suppose if you have 5 companies, there is one beautiful option. If you have multiple company bank accounts, if you want to see in single place one summary is possible using the M language with the same method. Just in Excel, if you open Excel in sheet wise, all the dashboards in dynamically, just only your job is to refresh button like this, refresh. You can see all the group companies bank statement, bank balances or OT balances or investments or sales, purchases or orders or yesterday's orders or stock, whatever you want to see, all the things beautifully you can design in Excel. It's very simple steps. You can put into somewhere. Every day if you come to office morning, if you want to see yesterday's status, just open that file and refresh. It will go and fetch all the group companies data, and it will show you report maximum by 1 minute. If you have 20 companies also, if you have larger data, suppose as per my experience, there are many clients they are facing with Tally is not giving good performance, it is delaying to export data. Suppose if they have huge transaction, if they want to export trial balance, it is giving half an hour, 1 hour, or they are exporting the columnar reports, it is taking half an hour. Yeah, front end there is challenges, but back end there is no challenges. If you use clear structure to give request to Tally, that will give very quickly response. But existing we also use VBA. To VBA also it is little challenging task to read and construct and updating into Excel. Again, it is a time taking job. But Excel Power Query is very powerful module. If you use the Power Query module, it will understand XML structure, which Tally will give response quickly. It will construct report and it will give you. Based on that, if you know the basic of M language or Power Query, the steps, if you record that and put it into your system, your job is to refresh, then you can able to see all the reports. Just I'll show you few reports, then we'll see based on your inputs and comments. I'll give you. Sorry. See, same again, to extract data from Tally, data, new query, other sources, go to blank query. Now I want to extract purchase register. Here I am doing only for single company. I am not doing any group companies data to extract. Just purchase report. You give module MS purchase report. Okay, advanced editor. Already I shared this code. You don't need to do anything. Just copy and paste it. It will come data. The only thing, if you want range of data, suppose 2 years, 3 years, or some 1 month, 2 months, there is a formula. Maybe if you see this code, you can easily understand. Here I am taking from 200 days of data, from current date to back 200 days of data. If you want 150 days or 100 days or 30 days, you just add this only. This one only. Otherwise, there are some other options also. We can use dynamic option also. From Excel, if you sell in sheet 1, cell 1, from date cell 2, that one, that means A1 and A2 from and to, if you give, based on that, if you refresh, that will fetch. That is also possible. But here I am showing this way. Just if you copy and paste it to this place and click it, just see, this will give you quick response. Okay, it is giving errors. Good, we'll debug that one. See here, I have hard coded company name. Maybe you also change in your code. Dynamic new, you just add ash as SV current company. Otherwise, you watch this video and correct it your code. Now it is extracting data. See, just where is in seconds it is fetching data for 200 days. We'll see how many rows of data is there. Maybe you can also ask question. You can connect to table or connection through, you can connect to pivots. See, for 200 days, there are 93 records. If you have lakhs of records also, it will give quicker way report. We'll see, we'll change it to 500 days. Again, I'm confirming you, I'm just showing only purchase report and sales reports. In Tally, whatever you want, you can extract using M language with faster way. See, 489 records is in the seconds it is connecting. Suppose the same report if you want to export from 10, it will take 1 to 2 minutes time. Okay. We extracted purchase report dynamically. Suppose if you add any records, I'll show you how it will update. Same like ledgers master I created and refreshed. We got that update. Similar way, I'll show you here also. Some larger value, maybe we will see the difference. Yeah, now it is refreshing 21st January. It is giving the same value. You can do formatting anything in here only, Power Query editor only. Suppose if you want to change this to number format, you can change it to number, decimals numbers. This if you want to change it to date, you can change it to date here only. No need to do in Excel. The Power Query will take care of it if you change there. See, now it is coming. Okay, it is updating purchase data. Based on that, you can analyze, you can create dashboards, you can connect this data to dashboards, daily dashboards or monthly dashboard for MAS. Similar thing will extract for sales. I know there are many persons they don't know they are facing challenge to extract purchase data, sales data, or sometimes ledger wise data for analyzing or GST purpose or 9C purpose. There are some many audits relating to GST. For that, they are facing many challenges. One more thing in Tally, if you have clear configurations in Tally, you will get beautiful reports. If you don't have clear-cut configurations, you need to depend on ledgers only or voucher types or some groups. Based on that only, you need to extract the data columnar wise and manipulating the data. It's time taking job completely. For that one also, if you know it is a quarterly basis report or you need to generate or yearly based or monthly based, one time job, you sit and understand the structure and what are all ledgers data you need to extract or sales data or purchase data or item wise. That's depending on your requirement. You
Babu,
just create.
Babu, there's a query that to pull a tax rate.
Sure, sir. Yeah. 1 minute. To convert multiple columns, okay. Please take tax rate and do it. Okay, so we have an sheet of GST as date. Okay, sir, extracting of the tax rate, we need to do some another script. Based on that, we can extract. If you want to extract detail item wise or HSN code wise, everything it will come. Just we need to construct that report. Currently, now I'll show you a small step. Yeah, 1 minute. Sorry. See, again, I recommend to use SQL query. Otherwise, it is a one-time job. You want a specific report, we can construct that report also. Here I'm showing you just for your requirement. don't think I didn't configure any, but we'll see. You can filter on it. We need GST rates for expense ledgers and asset ledgers. Okay, we'll take just direct expenses. Just taking this two. Okay, there is no GST rate. 1 minute. Yes, we got GST rate for that expense ledgers. Similar way we can fetch this data and we can append into that particular expense ledgers, or directly we can create some collections. We can construct directly required report. Yes. Is it clear, sir? Then there are other reports. You practice it. We'll move to another next topic. Today's topic. There are another two pending. We have 10 minutes only. Any doubts up to here? I'll give you 1 minute. I'll clarify if you have any doubts. Yes, sir. Quickly, I'll finish by 5 minutes. Other topics maybe will take 5 minutes only, not more than that. Sir, yes, can we extract month wise is possible. How you are seeing in Tally, similar way you can extract. It's very simple only, sir. Maybe I don't know your imagination, but as per my, you can give input date. There is a from date and to date. Month wise you can extract and you can append in M language. Or if there is a direct collection, we can use direct collection. We can extract month wise. The similar the best practice is it. You can give that from and 2 days, month on month, for 12 months or 20 months, whatever you want period. That will extract and you can append it. Yeah. Okay, we'll move it to next topic. How to handle larger data. I'll cover Excel formulas later if we have time. See here, I have two data sets, just having almost at 10 lakhs rows. For opening only, it is taking time. Maybe Excel has good engine, but sometimes it will work on XML method. You need to construct complete data and it should open. But Power Query, if you open empty workbook and if you connect through Power Query, that is a different engine associated with the Excel engine. It will give you quicker response. See, there are around P means around 16 columns, rows 10 lakhs 7,009. Almost 10 lakhs rows are there. The first file. I think second file also is same size. It is same. I think same rows of data only is available. We'll how similar method only. I'll show you quickly how to connect this data. Maybe if you connect, maybe you can use your requirements and construct your own reports. I'll show you just connect and how to build the basic one report. This similar way only data from data new query. From here there are many options, but here we need to use from file and folder. Just give this path, click OK. See here it is showing combine and edit, combine and load to, combine and load to. Just you click on combine edit, or for new versions Office 360 it will show combine and transfer. Click on the sheet 1, click OK. The first time it will take minimum 1 minute if it is larger data. From next time second time once if you refresh, it will quickly update incremental data only. If there is any altered data, it will update altered data. See, it is connected. But you can't open 2 files, that means 20 lakhs of data in Excel. But in Power Query, there is no limit. It will accept n number of rows. Sorry, 80, almost 160 MB. It is loaded 56, 57, almost 60 MB. It will take 20-30 seconds again. Maximum 5 minutes will close today's session. Yeah, 2 files are loaded. Now we will see just salesman wise sales amount or order amount. Yeah, shipping amount is there. I no need to do some other workings. Just I'm taking shipping amount and salesman. Here only we can do grouping, or we can connect to Excel, then we can do groupings. Just I'm taking salesman here, amount, some, the column should some shipping amount. Okay, it will take again for 10 seconds max. ATMB. Okay. So next topic is 5 advanced formulas. We'll cover quickly that one also. Any doubts? Just ping me through chat. It is summarizing data. Submission done. While I remove this one, we'll connect to Excel as connection only. Here we can use pivot tables. If you connect to pivot that 20 lakhs of data, you can do whatever you want in pivot also. Something my Excel is having some problem. Let them come. We'll go to formulas. Just I'll show you one formula, and otherwise I'll explain you how the formulas will work quickly. Okay, here I'll write you. One is sort, another one is sort by, one is unique, then filter. Can you tell me how many of you using these 5 formulas? Can you confirm through chat if you are using these formulas? Yes, otherwise no. I'll take unique formula. I'll show you how it will work and how it will help us to create some dynamic reports. See, here we have, suppose division, there is a region, there are around 27 rows, and app, then revenue. See here, if I want to have unique list of divisions, just use unique. Otherwise, there is option remove duplicates. That is hard coded value. That means values. It won't give dynamic value. See, just if you use unique formula, you will get unique list. There are some another arguments also that will help you. Maybe if you practice more and more based on your requirement. Not going to go in deeper. Same thing if you want to see regions also unique list. Just if you press unique, if you give that range, it will give you unique list. This is very beautiful formula. When you are creating dynamic reports, you can use it. Then filter. Maybe filter. Sorry, there is no sample data. I'll copy and show it to you. I'm not going to do anything here. I just explain you. This is very, very useful formula and very powerful dynamic formula. Filter. Maybe if you see there only they are displaying the example. Suppose if you want to filter in this complete data for, sorry, the range. In this, I want to filter data for, suppose we'll take for someone something which is all are unique. We'll go with value only greater than 50,000. Maybe it will give you dynamically the summary of the data. Suppose if there is any values, if you add in below or in between, if it is stable, it will take. So it will take automatically. Okay. This too is very useful formulas. XLOOKUP, it is replacing index match and VLOOKUP choose formulas. You can apply left and right, whatever you want. Same short is short. You can short your data, ascending and descending order, and by column wise also you can use these formulas. It will go to this place. Yeah, it's converted to pivot. Here easily we can use maximum 2 minutes. Will end this session. Shipping amount. So simply you can get this data. Now you can analyze 20 lakhs of rate data in your Excel. So if you want to do some formatting analysis, you do it in Power Query only. Then that will handle very easily. Then you connect to pivot tables, or you can connect the summarized data directly to Excel. This is what I want to show and give the advanced formulas to you. Any doubts, if you have any questions, you can ask. I will be there for another 1 minute. Yeah, this Power Query is very useful. Yeah, very good. Someone is asking XLOOKUP with examples. Super. Give me a minute.
ಕೊಡ್ತಾ
1 minute, sir. Okay, here. Okay, VLOOKUP, how it will work. Suppose if you want to fetch data, you need to fetch it from right side. Vertically, it will fetch data, or you can use choose formula. It will fetch from. Otherwise, you can use index match. These are all up to Office 365. We used it after 365 Insider once it is came introduced. It is replaced with XLOOKUP. All the scenarios. First, you will understand XLOOKUP arguments. There is first lookup value, then lookup array, then return array. They are dividing each and every area. That means you can I'll show you with the example only. Maybe very simple. In lookup, we need to get lookup value. We need to give lookup value. Then second array, we need to give complete table range. Within the table range, from table we need to define. Then that will take the range. Here we need to do complete. We don't need to give complete range. We can give source and return value column. Then it will fetch. If it is left or right, no man, it will take the value. Here we'll see divisions. I have an app. 1 minute. This app name. Quickly, I'll after this we'll close this session. Accord, where is accord? Here, accord is there. Now I need to see the division utility here. I'm typing here using XLOOKUP. How to get it? XLOOKUP. The first thing it is asking lookup value. Second one, it is asking lookup array. Array means this is my array. Second one, it is asking return array, from where it should get the data matching return array, comma, if it is not found, what it should display. You can add NA or missing something, whatever content you want. Okay, if not found 0, you can use our regular method only, no issue. It is giving utility. Okay, this is what maybe we call reverse VLOOKUP index match something. It will give reverse value. Same thing, if you want to get profit, XLOOKUP, like VLOOKUP function. Again, same. You take this one and give the array. Then you give profit column range is 0. It will give the value. That is I called 800 rupees. This is how XLOOKUP will work. This is also very beautiful formula, and there are many other optional arguments. You just practice it. Maybe it will help you. Thank you, sir. Thank you. We are ending this session today. Rajesh sir, are you there?
Thanks, Babu. Thanks for
Thank you,
your
sir.
wonderful session on
Thank you,
giving
sir.
different new utilities where we can use effectively in the course of our working. Okay.
Yes, sir. Yeah.
And I think in an earlier session, one of the aspects was asked to be covered, that is how to reply to the note ITC mismatch. In fact, I did explain in detail various scenarios where there will be credit mismatches and what department would try to do and how we need to address. In that context, first and foremost thing, we need to understand for any notice to be replied. Firstly, what is the authority under which that particular notice is being issued? When they are questioning the ITC eligibility, as I was mentioning, section 155 of the CGST Act says the burden of proof lies with the person claiming the credit. That does not mean that you have to, your entire responsibility is only on you and there's no responsibility on the department and the issue notice. When the department issues a notice, it becomes very, very important for them to bring out a evidence or the basis on which the notice is being issued. Point number one. Point number two, the statutory provision under which they are issuing a notice. 3, what is the provision which is violated or non-compliant due to which the proposal or demands are being made. When it comes to ITC mismatch, as I was mentioning, once you have established the conditions of 16.2, you are eligible for the credit. Now, there are various reasons due to which there may be a mismatch in the ITC credit, which we shown in our presentation. Some of them are clearly set out in the circular. Many of them are not at all addressed in the circular. That is what I was trying to highlight. One of the prime reason is your supplier has not at all uploaded and is also not available. Another scenario may be he was genuine at the time when the supply happened. Now he is not traceable and his registration is cancelled. So for any default of the supplier, whether the recipient can be held to be liable for payment of tax. Sorry, reversal of the ITC. In this regard, I would give you certain basic points which you can note down. First and foremost thing, you have to establish the 3 conditions which there is no option for you to be shying away with. That is, you should be having a possession of invoice, you should have received the goods, or services as the case may be, and you should have filed your return claiming the credit. The only challenge which is coming is whether the supplier has paid the tax or not. In fact, in the notice, they are not at all invoking the provisions of 16(2)(c), and merely they are saying that there's a mismatch. You can simply say merely a mismatch of the credit does not substantiate any of the violations of the law. Hence, the notice is invalid and incorrect or improper. Accordingly, the proposal cannot be made. Now, what is the impact which is going to have? The officer can get enriched with his knowledge because of your reply. He can go back and try to amend the same notice and issue a fresh notice. If it's well within the time, he can do it, otherwise he cannot do that. Now, these are legal points which is very much important for you to take up in a litigation. You need not establish your right. It is sufficient you establish that the notice is incorrect in any litigation. That is where the things stop. There is no responsibility upon you to establish your right. So in other words, if they have not invoked section 16(2)(c), then you need not establish the condition of 16(2)(c) in the show cause notice. Okay, so this is something which you need to keep in mind. Next, there is also a couple of high court decisions which have said when there is no proceedings initiated against the supplier, the recipient's credit cannot be questioned because they are also registered. The department themselves are given a registration to them. If the department cannot hold the assessees who are registered with them responsible in a bona fide transaction between the supplier and the recipient cannot be penalized for the default of the supplier is one more argument which is being placed by the while replying to the notice. Next, if you actually look at it and if you're able to establish the errors are for the reasons which are stated in the circular, then obviously you can go and approach the supplier and take their declaration and submit those declarations. If there is a possibility, there is sometimes it may so happen that there will be it may so happen that they may be taking some time to get a declaration. By the time the authority already passes an order, in the appellate stage also you can bring in those evidences and will be able to be brought in to the officer on record, so that you can, what was the reason why you couldn't produce at the earlier stage, so that you can produce the next stage, so that you can get relief at a next subsequent stage. One more important point which you can note down is this particular issue of 2A 3B is not a problem of any particular assessee. It is a all industry issue and it has a repercussion in thousands of crores across the country. The government cannot simply close their eyes towards the trade and try to implement a law due to the initial period of hiccups. So we are having a very good hope that the government would come out, or at least the judicial forums would come out, like in the erstwhile sales tax law, or for that matter central excise law. Always it was said that the recipient who are genuine and bona fide and establish their bona fides cannot be penalized for the supplier's default. I think hopefully those would definitely come in a handy in your reply business. When it comes to the procedural aspect of reconciliation while doing the replay, it is up to your choice what strategy you want to adopt. You want to, it is genuinely, you know that you can't trace the supplier, and also you have also lapsed from your side, then you may have to fight it technically without getting it too much into actual merits of the case of the data compilation, data crunching. On the other hand, if you are clear with your data, evidences, etc., to establish your credit, then go with a factual submission and providing the details of the same. I think this are something which which are the points you can keep in mind while replying to the notices. If any specific query, you can always post it to our email ID. We'll address. Probably we can give you some more detailed points how to address these notices through mail separately and independently. I think hopefully we have covered the points. And in the GSTR 3B returns, the updates and all we covered. I think hopefully you have got some inputs, and also from the technology session also hopefully you have got some validation out of this program. Any questions, you can just post it so we can address that. Otherwise, we can conclude the session. Thanks for everyone who have attended this program, and we will continue to give similar programs in the days to come. Any questions? You can either post. Okay. I think we have addressed. We can conclude. I think Jagadeesh, thanks for the session again. Babu, again, thanks for the support given by you. And I thank each one of you for attending the session.
Thank you, sir.